When the financial world came crashing down in 2008, trillions of dollars evaporated from global markets. Banks collapsed, real estate crumbled, millions lost their jobs, homes, and life savings. It was the worst economic disaster since the Great Depression. But in the midst of all that chaos, some businesses didn't just survive, they thrived. Fast forward to today, and the world is again on edge. Rising interest rates, inflation, geopolitical instability, it's starting to feel familiar. So the big question is, which businesses weathered the 2008 storm, and what can we learn from them to protect our future today? Let's break it down. Because if history taught us anything, it's that downturns are inevitable, but how you prepare, that's optional. The 2008 meltdown, a quick recap. Before we talk survivors, we need to remember what they were up against. The 2008 financial crisis wasn't just a bad year, it was a full-blown systemic collapse. It started with subprime mortgages, banks issuing home loans to people who couldn't afford them. Those risky loans were bundled and sold as safe investments. When homeowners began defaulting en masse, the entire housing market collapsed. The domino effect was brutal. Lehman Brothers went bankrupt, AIG was bailed out, the stock market tanked, unemployment soared, people stopped spending, credit dried up. It was a perfect storm, and it wiped out thousands of businesses. Yet, in this bloodbath, a few stood strong. Discount retailers. The power of cheap when money gets tight. People don't stop spending, they just spend differently. Enter discount retailers. Companies like Walmart, Dollar Tree, and Dollar General saw increased foot traffic during the recession. Why? Because even when the economy crashes, people still need groceries, toiletries, cleaning supplies, but they're hunting for deals. Walmart's low-cost model gave it a massive edge. While department stores like Circuit City and Linens and Things went under, Walmart's revenue climbed. In fact, Walmart's net sales in 2008 grew by more than $10 billion, 0 cents, compared to the previous year lesson. In tough times, price sensitivity becomes king. Businesses that offer value without sacrificing quality thrive when wallets tighten. Fast food. Comfort in a combo meal. Believe it or not, the fast food industry didn't just survive the recession, some chains actually did better. Why? It's simple. Fast food provides cheap comfort. When people can't afford to go to nice restaurants or travel, grabbing a $1 0 cents cheeseburger feels like a small indulgence. It's fast, affordable, and familiar. McDonald's, for example, performed surprisingly well in 2008. Their dollar menu strategy was genius for the moment. And with real estate prices plummeting, they had the opportunity to expand while others downsized. So yes, greasy fries and milkshakes became recession-proof lifelines. Alcohol and tobacco, the vice industries. Here's the uncomfortable truth. When life gets hard, people lean into vices. Alcohol, tobacco, and more recently cannabis often see steady demand or even an uptick during recessions. In 2008, while luxury goods slumped, companies like Altria, makers of Marlboro, and Anheuser-Busch weathered the storm. The reason? Their products are habit-forming and relatively low cost per unit. It's not exactly an inspirational business model, but it's a cold economic reality. Industries rooted in habitual behavior tend to be more resilient when the economy collapses. Repair services? Fix, don't replace. When people can't afford new things, they start fixing the old ones. During the 2008 crisis, businesses related to auto repair, home repair, and appliance servicing saw steady demand. Instead of buying new cars, people got oil changes and brake pads. Instead of replacing washing machines, they hired repairmen. This maintain over replace mindset became widespread. Companies that leaned into this, like AutoZone and O'Reilly Auto Parts, actually saw increased business. Recession rule: necessity always beats luxury. Healthcare. Because sickness doesn't stop, healthcare is the ultimate recession-proof industry. Even in economic freefall, people still get sick. They still need prescriptions, they still go to hospitals. While discretionary surgeries might decline during recessions, demand for essential services holds firm. In fact, healthcare employment actually grew during the Great Recession. Pharmaceutical companies and insurance providers also stayed relatively stable. Companies like Johnson & Johnson and Pfizer didn't experience the wild swing seen in the tech or banking sectors. Bottom line, health and safety don't care about GDP. Utilities. No one cancels electricity. Water, gas, electricity, internet, no matter how bad things get, most people continue paying for utilities. They may cancel vacations or skip Starbucks, but they're not going to sit in the dark. That's why utility companies tend to be some of the most stable during recessions. They operate under regulated markets with predictable cash flow and essential services. Their stocks might dip slightly but rarely collapse. In 2008, companies like Duke Energy and Southern Company remained relatively insulated. They didn't post record profits, but they didn't crash either. Stability is survival, consumer. Staples, always in the cart. You might not buy a new TV in a downturn, but you'll still buy toilet paper, toothpaste, and bread. That's where consumer staples companies come in. Think Procter & Gamble, Unilever, Kraft Heinz. They make the everyday products we rely on. These aren't optional purchases, they're routine. And during the 2008 meltdown, while luxury and tech were decimated, consumer staples saw steady revenue. These companies often increased their market share as smaller competitors folded or got bought out. And because many of these goods are relatively cheap, customers rarely trade down. Eject to good. Skill training, recession equals reset. Here's a surprising one. Online education and vocational training actually boomed during the recession. Why? Because millions of people who lost their jobs were looking for a new skill, a new career, or simply a way to stay competitive. This was the beginning of the rise of platforms like Udemy, Coursera, and even growth in community colleges and trade schools. When the job market dries up, people invest in themselves. That mindset continues to hold value today, especially as automation and AI change the employment landscape. Debt collection and bankruptcy law. In downturns, certain pain-based industries soar, and none illustrate this more clearly than debt collection agencies, credit counseling services, and bankruptcy attorneys. It's harsh but true. When people fall behind on payments, someone profits. Law firms specializing in bankruptcy and restructuring were overwhelmed with clients in 2008. While this may not be the feel-good side of business, it shows that following the money often means understanding who benefits from pain. So, why does this matter now? Because signs are flashing again. Inflation has pinched spending. Interest rates are high. Student loans are back. Housing is becoming unaffordable. And layoffs are creeping back into headlines. You don't need a PhD in economics to sense that another storm might be brewing. That's why looking back at 2008 is more relevant than ever. It teaches us which business models endure when the world falters. It tells us where to invest, where to build, and how to survive. If you're a business owner, entrepreneur, or investor, ask yourself, does this product solve a need, not a want? Can people afford it when their budgets shrink? Does the business model rely on loyalty, habits, or necessity? Is it built to scale in a crisis or just during good times? Recessions are brutal. They expose weak strategies, fragile companies, and speculative hype. But they also reveal who's real, who's built on fundamentals, value, and resilience. In 2008, it wasn't the flashy or fancy companies that thrived. It was the ones that understood human nature, delivered consistent value, and stayed lean. So if you're planning for the future, don't just ask what's hot right now. Ask what people can't live without when everything else falls apart. Because that's where true wealth survives. Want more deep dives into how history, business, and money collide? Hit that like button, subscribe for weekly insights, and let us know in the comments which businesses do you think will survive the next crash? Because the next storm might be closer than you think.